Howdy, partners. One of the best places to look for reliable dividend income is in industries or sectors that provide a necessary product or service. And if those sales are recurring, well, that's even better. And to make it really compelling, if you can find them in an industry or sector that's beaten down and looks undervalued, that can really provide interesting opportunities. Well, in August of 2025, that sector and industry looks to be healthcare. So this month, my best buys list is all healthcare stocks. I've dug deep and found some interesting opportunities. Today, I'm going to share with you three of them. So stick around. If you're new here, I'm TJ and I write Compounding Dividends. It's a dividend investing newsletter with more than 150,000 subscribers. And every single month we do a best buys list. Now, keep in mind, this isn't financial advice. These are just some interesting opportunities that are available based on my initial research. And before you invest or make any decisions, you should definitely do your own research and make your own decision. But if you like content like this, make sure you like and subscribe to the channel to get the video of the best buys every single month. So as I mentioned in the intro, healthcare's had a rough start to 2025. And as you can see, it's the only sector to have a negative performance so far year to date. And there's a lot of things going on. There's political uncertainty, there's regulatory uncertainty, there's questions about tariffs on drug prices, there's rising costs, all kinds of things are kind of hitting the sector, and it's multiple companies. So drug companies are suffering due to the potential tariffs and regulatory changes. Healthcare and insurance companies are struggling due to rising costs and increasing use of services. And even the life science and equipment providers are seeing reduced demand, which is dragging the whole sector down. If we look historically, we can see that the healthcare sector is trading to a discount to both its own historical valuation on multiple timelines, and it looks very cheap relative to the S&P 500. That makes it potentially an interesting opportunity, but sometimes prices are depressed for a good reason. Despite the current challenges, I think it's important to remember that healthcare does still have some long-term tailwinds intact. Globally, the population is aging, which should drive demand for healthcare, drugs, services, and we have all kinds of innovation driven by new scientific discoveries, the use of AI and drug discovery and research. There's a lot of things that in the long run should drive demand for healthcare. I don't think this sector is going anywhere. And historically, the healthcare sector has performed very well. The S&P 500 healthcare index has outperformed the broader S&P since 1989. And for us dividend investors, this is a sector with defensive characteristics and growth tailwinds intact. When it's valued at a low valuation, that could potentially provide some really interesting opportunities for us to buy some quality companies at a discount. So the healthcare sector looks like it might be offering some really interesting opportunities. I've scanned our buy, hold, sell lists, and I've found 5 interesting companies in this space. And today I'm going to share 3 of them with you. Now, all 5 are for paid subscribers of the Compounding Dividends newsletter. And if you're interested in becoming one, the link's in the description below. Go ahead and click it, check it out. The first company we'll talk about is Baxter, and this is absolutely a critical company. Think about hospitals and healthcare providers worldwide. They depend on Baxter's products for things like kidney care, dialysis, and critical care infusions. And the interesting thing about Baxter is they have been pruning their portfolio. They've been divesting non-core assets to improve the balance sheet, to focus on the core business, and to be able to reinvest in more attractive opportunities. So there have been some near-term challenges. There have been some analyst downgrades, but the company is still generating plenty of free cash flow. And currently it's trading at one of the higher dividend yields that it's been available at in the past 10 years or so. If we look at some of the stats on Baxter, you can get a dividend yield above 3%. Now, the payout ratio is negative, but that's due to non-recurring charges for the most part. And the forward PE is down to 11.2%. And the interesting thing with Baxter is that its products sit at the crossroads of critical care and recurring use, meaning that they do have recurring revenue. So our next company is a life science company. This is a pretty famous compounder. It's Danaher. And one of the interesting things about this company is the famous business system. It's all about continuous improvement, and it's one of the secrets to that long-term compounding. If we look at their history, you can see a pretty steady trend of expanding margins and growing free cash flow. Now, The company's portfolio is diversified across a lot of different markets, and its culture has allowed that compounding of cash flow, as well as continual sharing of some of those profits with long-term shareholders. It's trading at a lower valuation than typical. You can get a dividend yield, it's only 0.6%, but the payout ratio is very low, under 25%, and the forward PE is 25.1, which is relatively low for a company of this quality. This isn't a company that you buy for the dividend yield today, but with that low payout ratio and long history of growing free cash flow, this is a company that over the long term should reward shareholders. Last on the list is Bio-Rad Laboratories. Now, this is not as well known as some of the other two, but it is an important company. Researchers and clinical laboratories around the world rely on their equipment to understand biology and diagnose disease. And they do have some recurring revenue because most of these companies and laboratories don't want to compromise on quality. And the researchers, once they get to know a certain set of instruments and equipment, they don't like to change. Now, they can experience some cyclicality, but they do generate pretty healthy free cash flow. And this company is also a little different in the fact that while they don't pay a dividend, they have been funneling a lot of that free cash flow back into share repurchases. And they're trading at a bit of a discount to their historical valuation, which should increase the effectiveness of those buybacks. If you're looking for total return instead of just pure dividend returns, this is a company that is returning capital to shareholders, just not directly as a dividend payment. So there you have it, the first 3 companies on my best buy list for August of 2025. And if you want the other 2, make sure you go subscribe to Compounding Dividends with the link in the description. Go there and you'll get in-depth analysis, exclusive insights, and we'll make sure you stay ahead of the curve in the world of dividend investing. And if you like this video, make sure you subscribe, give it a thumbs up, and let me know in the comments, do you have healthcare investments? Are there companies that are interesting that I missed? I'm curious to hear what you think. Thanks for watching, and I'll see you in the next one.